With the quorum present, I'd like to call this meeting of the Co-op Budget Committee to order at 6:33 p.m. This is a regular meeting of the Co-op Budget Committee for the month of August. We took off the month of July, as is our practice, and we're back in session, and we'll continue on our regular schedule as we start the new fiscal year with our students in class, all students in class starting today. The agenda for this meeting was posted in advance as required, and I'd like to introduce myself, Darlene Mann, and the members present this evening, who include Tom Enright, Melanie LeVake, Tom Solon, Brian Rader, Raul Blanchet, and Tony Sinizzi. Dave Blinn has an excused absence for this evening. I'd like to welcome the district's new BA, Lance Fulmino, this evening. I hope the members, if you haven't introduced yourself to Lance prior to the meeting, please do so afterward, but welcome. And I'd like to also introduce Tim Green from the auditing firm for the district. He joins us at this time of year on an annual basis for probably the last 5 or 6 years or so. You've joined us in August, so I appreciate your time this evening. If you could all please join me in the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Tonight we'll appoint Tom Enright as our meeting observer, and I'm going to bypass I know the approval of minutes doesn't take long, but in the interest of, respecting Tim's time for joining us this evening, I'll move those kind of administrative items to later in the meeting. Seeing no public this evening, we'll bypass public input as well, and proceed to the audit overview. So, Tim, as I mentioned, you've joined us annually. I don't recall how many years your firm has been the auditor for the entire district, and so we certainly do appreciate your time this evening as you come to review not fiscal year 25's audit, but fiscal year 24's audit. The business office spent time with Tim and his team over the summer to work on the necessary items for the FY25 audit, which was, I'm assuming, completed, and they're underway with their supplemental information. So what we're discussing, and what I shared with everyone, is the audit from fiscal year 24.
Correct. Yes. Once again, I'm Tim Green with Robert Tim Green. Yeah, I don't recall how many years you've asked me to come, but I've been the auditor, I believe, for 15 years now.
Wow,
probably.
okay. Uh-huh.
Yes. And I appreciate the district's support of our firm as well. So certainly mutual understanding and agreement and, history that it goes back. So from there, I'll try to hit some of the highlights. I try not to be long-winded, but also if I skip over something that you had a question on, obviously I'm happy to take any questions that you may have. So I'll jump right to page 1, which is, as I tell you every year, but I know there's some new faces. This is what I'm hired for, is this first letter. I'm hired to give an opinion on your financial statements, of the school district's financial statements, as whether or not they're fairly presented. And there are no material misstatements. And once again, I am pleased to announce that, as you saw, the school district received a clean opinion. There were no issues with any of your opinion units. I gave you a separate opinion on different aspects of your financial statements. You have governmental activities, which are the first 2 exhibits, which I'll discuss a little bit, and they are on a full accrual basis, kind of like a business. They're designed to be somewhat similar to a business's financial statements. And then you have governmental funds, which represents your general fund, your food service fund, your grants funds. These are modified accrual, so this really is more current resource based. And then depending on the size, it's either a major fund or a non-major fund. And then if it's not a major fund, I give you an opinion on collectively the remaining funds that you have. So you see, if you were to read this, you can see multiple opinions referenced. The information within our letter is certainly very standard, in accordance with standards. We always are going to discuss what our role is versus what management's role and the school board's role is. And then we also discuss the various components of your financial statements that we do assist in preparing. We take the school district's data, and then we will put it in the form of the financial statements. The school district will take it back, review it, make sure that they understand what's in this data, and it is consistent with what they presented to us in the first place. So with the school district taking on that responsibility and accepting responsibility for the financial statements, we are allowed to do that. It's considered not a test service. That's not an audit service. It's just a separate service that the standards do allow to be combined, if you will. After our opinion letter is the management discussion analysis. This is drafted by the school district, the business office typically. We don't give an opinion on it, but we do review it for consistency and indicate that in our letter that this is consistent with the data that was presented for audit. But we're not making judgment on the information within it, aside from, again, the financial information being consistent with the rest of it. So I don't usually have much to say on that. So I'll jump right to the financial statements themselves. Again, I mentioned exhibits 1 and 2 are full accrual basis, and you can see there's just one column called for your governmental activity. So this is a combination of all governmental activity, including capital assets, including long-term liabilities such as your debt, your compensated absences, your net pension liability, and your OPEB liability. So the very bottom number for on Exhibit 1, you can see your total net position. It was just over 3.5 million. In comparison, your total net position the year before was 2.8 million. So you can see an increase of just over 700,000. Yes.
Do you do trend analysis to compare, say, 5, 10 years?
I have about 6 years I'm looking at,
Okay.
or 6, 7 years. Yep. 2 years ago you were 3 million. So I'd say your the baseline the last 3 years is about 500 to $1 million higher than the previous 3 years. Again, this is a full accrual basis, so any new lease improvements, so your efficiency projects, maybe changes in the pension liability calculation that is done by the New Hampshire retirement system can have a big impact on that number as well. So fluctuations do occur and almost are expected. Exhibit 2, this is again full accrual basis. This is a statement of activities. You can see on the full accrual basis, the total expenses for the school district was just about $27,500,000. This statement breaks down program revenues as a component of those functions of expenses, as well as general revenues, and of course how school districts work. You can see $26.5 million is general revenue because your school district assessment from the towns, and then your state aid benefit the school as a whole. They're not targeted to any specific program, so they're considered a general revenue, just supports the whole operation. So as I said, you can see began the year 2.8 million, ended the year 3.5 million, an increase of a little over 700,000. Now, as we'll get to exhibits 4 and 6, we'll give you basically a crosswalk between modified accrual and full accrual, and what items show up on one statement and don't show up on the other. But moving to exhibit 3, this is your governmental funds. This is your balance sheet for your general fund, food service, permanent fund, and your non-major funds as an aggregate column. So you can see that first column, the general fund, total assets just over 3 million, total liabilities 360,000. You had total fund balance of 2.6 million. Of that, it's broken down into 4 out of possible 5 categories. You have non-spendable fund balance of 227,000. This represents prepaid items, which means a prepaid item is an asset at the end of the year, but your cash has been used for that prepaid item. So on July 1st, it becomes a reduction of fund balance. So you keep it non-spendable. You don't want to double count it at the end of the year. You have committed fund balance of 890,000. This actually represents your capital reserve and expendable trust funds that are reported within the general fund for financial statement purposes. You do keep them separate when you account for them and when you budget. But in this financial report, you do combine them. You have assigned fund balance, 400,000. This is any rolled POs or any other encumbrances that are put forward by the board or by the management. And you're left with an unassigned fund balance in the general fund of $1.1 million. Compared to the year before, that figure was 800,000, so you have an increase of about 300,000. The year before that, we're drifting back into the COVID years, so you had fiscal year 22, your number was 1.7 million unassigned fund balance. The year before that, you were up to just over 2 million. So you can see it's come down. But as a baseline, if you were to go back to fiscal year 19 and 18, both those years you were around 600,000. So I would consider it very consistent. Also, when we get to the end, I'll show you. You can see the surplus, your budget surplus figure. So I took that number and said how much of your unassigned fund balance relates. Excuse me, how much budget surplus compared to your overall budget, and that number's been pretty consistent. You'll see when I get to it, I'll go over it again, but you're about 4% budget surplus if you look at revenues and estimates of your total budget. Other major funds you can see on Exhibit 3 is the food service fund. The total fund balance of the food service fund at the end of the year was just under 500,000. The one finding you will note at the end of this is an excess of fund balance in the food service, being essentially a break-even. The program is designed to be a break-even program. Obviously, during fiscal year 22 and 23, they had basically every lunch was free, and there's a lot of federal influx of funds there. So, consistent with every school district, everyone's kind of saw the result being a rise of that fund balance. So, I don't know what kind of pressure the state's putting on school districts to spend that and how fast, but I know the school has been spending that down slowly, but it has been coming down. The fiscal year 23 fund balance for the food service program was 650,000, so you're down to 480. And looking at the results from the fiscal year 25 already, it went down another 50,000 or so. So it's going down.
I think we had to submit a whole spend down plan once you hit that.
Yeah.
Once you're over the amount that you're allowed to keep, they give you a certain time frame to spend down the balance and
it's
make some improvements.
It can be challenging because you're not allowed to reduce prices or anything.
Correct.
So
Correct.
there are limits.
You might not want to increase prices, but it normally requires some purchases of replacing equipment or expanding some of the things that we have for our food service area.
Also on Exhibit 3, the other major fund is the permanent fund. This is the trust fund. This is funds held by the trust funds for the high school. Again, they are considered part of the school district's financial statements. But basically the school district sees the income on an annual basis. They don't have control of the principal or the actual investments themselves. It's done by the trustees of the town. And then there's a column for other governmental funds. Those figures are broken down further in the back exhibits, starting with Exhibit 13. And it's made up your student activities fund, your athletic revolving fund, your miscellaneous fund, which represents miscellaneous programs funded through donations or local grants or other such sources, and then your federal grants fund. The total you can see fund balance for those other governmental funds is 315,000. So moving on, Exhibit 4 is, as I said, this is a crosswalk between the two different accounting bases and how those balance sheets. The balance sheet of your governmental funds corresponds to the net position of your governmental activities. So you can see you had your governmental funds. You had just over 4 million combined fund balance. You add your net capital assets of about almost 22 million. You have accrued interest on long-term debt of about 100,000. You have all your long-term liabilities, your bond and note that's outstanding, your capital lease payable, your compensated absences, which is accruals of sick and vacation that can be paid out upon termination for employees. Your termination benefits payable, the school district has a benefit for, I believe for teachers, if they retire a little early and they have a certain longevity and certain age, there is a benefit there. And then your net pension liability, again, almost 19 million. That number is determined by the state. They put out a report every year. Their auditors and their actuaries put out a report that breaks it down by every entity that's in the system, and so the school district just incorporates that data right into this report.
How volatile has that been?
The fluctuation for you would be about 5% maybe. It fluctuates that. It's the interest rates. There was a period of steady rates, and then obviously a year and a half or so, the rates went up, and so it kind of got incorporated into that latest valuation. But again, I think the next one will be pretty consistent again, because rates haven't really moved as much as they did that first year. And then deferred inflows and outflows are related to pensions and OPEB liability. Exhibit 5 is your governmental funds statement of activities. This is revenues and expenditures for your governmental funds. So you can see the general fund total revenues just under 27 million, total expenditures 26,400,000, which results in an excess of revenues over expenditures of 400,000. A small transfer in of $7,000, and then a total net change in fund balance in the general fund of 414,000. Again, food service, you can see there was a decrease of 180,000, as I mentioned. And then your permanent funds had an increase of 40,000, which is primarily investment earnings. Exhibit 6, excuse me. This is the difference between the revenues and expenditures on your modified accrual basis to your revenues and expenses on the full accrual. So you can see, almost $900,000 of capitalized capital outlay, depreciation expense of $1 million, repayments of your bond and leases is a reduction of a liability versus an expense, and then the changes in you can see that, to answer the question too, there's a $300,000 or almost $400,000 difference in pension expense on the full accrual basis compared to your general fund expenditure basis, which is just truly your monthly contribution requirements. Exhibit 7, this is a budgetary schedule. Statement of revenues, expenditures, and changes of your unassigned fund balance on the budgetary basis. So you can see your original and final budget. Were there any changes for unanticipated expenditures, or it was a year that you needed an emergency appropriation out of retained fund balance? You have a final budget column that was different than your original budget, but there's only, as you know, there's only a few methods for having a difference in budget than what is approved at the district meeting. So you can see the net change in fund balance on for your budget was $855,000 decrease, which is basically what you're saying you expected. That's your fund balance you expected to offset the appropriations. But you can see the actual variance on that far right column was positive about almost 1.2 million. You can see if you were to look at the underlined columns for total revenues, you can see that the budget was estimated revenues was 26,736,000, and you had an actual revenue of 26,794,000. So you had a positive variance there of almost 60,000. And then for your expenditures, you had appropriations of 27,266,000, and actual expenditures of 26,000,000 of around 150,000. So you had that's where you had $1,120,000 positive variance there.
Darlene, do you remember what led to those? I'm guessing it was probably a combination of special ed expenses and things like oil expenses, heating,
Probably.
Does that ring a bell with you? It's usually special ed that swings it.
Usually special ed does swing a lot of it, and if we had any vacant positions, sometimes that the vacancy gets offset by contracted positions, which sometimes cost more. But lately it has been the swing in special education. But I'm
wondering if it had to do with the difference between projected, the guaranteed maximum when we had that.
That could, that could be it. I could look back, but
No, I was just curious
off the top of my head, I'm just not recalling.
I think it's windfall stuff as opposed to over budgeting.
Correct. Mm-hmm.
Yeah, so if you look at Exhibit 16, it does break down more by function.
There we go.
It doesn't drill down, of course, by your line items, but your special education had the biggest positive variance for sure. After that, student support and your other, which is your personnel benefits, probably you might have had some fluctuation there too.
The big thing there, if I recall, was they projected a very high GMR that year, and it came through quite a bit less than what it was. But that whole projection thing has changed now, hasn't it?
Right,
It's no
there's-
longer,
there's
it's now
no-
a fixed,
there's no-
it's now a fixed rate that they give you, and they give
It's
to
a
you
fixed
as
rate
well.
in the fall.
And they give to you, yeah.
So Exhibit 8, this is a budget schedule for your food service fund. Food service, I know, the budget amount just comes from the DRA forms, and I think that number sometimes stays static because you're estimating equal revenues to your appropriations, so you're, sometimes that just can be a number that's placed there. I would encourage the school to kind of get more, look at your figures, try to be more realistic with that amount, because again, understanding you still have to, still have to explain this, but you're increasing the bottom line, but you're not increasing any sort of tax revenue. So it is, so your $400,000 difference in what your actual results are compared to that amount that's put on your budget form. So I would encourage maybe some changes to that.
Are we high or low?
You're low. Your appropriations 400,000. Your actuals 800,000. So what you'd be doing is you'd be increasing your local revenue source to basically match that.
So we did authorize, the board authorized a price increase. Would that?
Well,
be-
that your results are fine. It's the budget itself. It's just what number goes
okay.
on that budget form, that MS-22.
So when we have food service, it's a self-funding mechanism, so revenues are gonna equal expenses, but what Tim is saying, so what happens sometimes is that, we know the amount of staff, we know, and we've, have gotten used to over time, kind of assigning that number and not really deviating, so his, recommendation would be to
So are we,
kind of go back and reevaluate that a
are we
little bit
under
more
budgeting or over budgeting?
Under budgeting.
Okay.
So I propose that for the next meeting, we should have the food service staff come and brief us to understand. If we're gonna make-
We did the food service overview
Already?
this spring.
Yeah.
Mhm.
I don't think
So-
they're the ones who's gonna help us with the financial side. I think we're gonna be hitting up plans for that stuff.
Yeah, yeah. So it's gonna be probably a more, a better evaluation of, where the staff sits with, it's because it's predominantly food costs and staff costs. And then the food costs are, and which are offset by the, revenues we receive from the government. So it's really just getting a more accurate reflection of what it's
So
gonna be.
maybe
So
more
what
in-
that does do, though,
Yeah.
just as a reminder, if you're increasing the budget, we would be offsetting any increase on the revenue side. But if you're gonna look budget to budget at just a flat number, you would be seeing a percentage increase that we would have to explain to the community, but it's not an increase that's related to the general operations of the school
There's
itself.
not-
So you have to
It's
kind
not
of.
a tax impact.
Correct. There's a direct offset to it, so.
So should we be using the previous year's number as the budget moving forward?
What I would expect, and we could continue to talk about, is there might be a better number that's put in there. So the food service piece is in the part of the budget, it's the transfer section. And we have been holding that flat, year over year, so it's just getting a more accurate number that we put in there. So that'll,
So we're spending more and we're charging more, but we haven't reflected it in the budget.
right,
Just thinking that this should be really a reflection of the population of the school, student population.
There's a whole bunch of other factors.
there
that
are so many
rank
factors
into
that
the costs.
contribute to the
So it can't
costs
be-
of running the food service program.
Right. As-
It's not
Aside from
proportional to the
that-
students.
Pardon me?
It's not at all proportional to the students, unfortunately.
Because that was what I was driving at.
Yeah,
If there's a
'cause
way to look at it and look at the population of the enrollment this year versus last year, if it goes up, then food costs, the service should go up.
there's some, trend analysis that you could put toward it, but what you're really looking at is, just, even making a step to say, aligning our budget to where actuals ended up for FY25, that gets us closer to kind of, where it realistically is, which is something that's gonna be different from FY24, but maybe just aligns it a little bit more. I mean, but, we obviously have, We've had staffing issues with our food service department and things like that, so that also contributes to, while we have a spend down plan and are spending down those balances, we are probably, we're responsible for providing a certain level of, number of meals to students, and we're doing that with with fewer people. So we're maybe not incurring it, there are just a lot of components to it, so.
Regulatory changes in what had to constitute the menu, and the food purchases and the cost of the food. And the weird thing is, to your point, Tony, that menu has a really big impact on how many kids choose to buy meals.
Right.
Yeah.
So it's almost disconnected in a weird way.
Yep, thank you.
But on the negative side of things, we increase that number substantially. It increases our budget, increases our percent of increase, something we're not looking forward to. So just
Exactly,
there are other
yeah,
Percentage,
yes.
in round numbers, what's the deviation that we had?
About 50%.
No, not
Or-
percentage-wise, actual dollars.
Yeah,
Okay.
so twice as much.
So it's a big chunk of change.
Yeah.
So you can, slowly, but
Yeah, slowly would be good.
yeah.
Or better.
Yeah, so what we have budgeted for the last few years in that, for our food service transfers, 400,000, so.
And again, your expenditures are higher because of you're trying to spend down that fund balance. So
Right.
I don't think that's your baseline every year going forward. I think you'll see some regression because once you get your fund balance to where you should be, I'm sure you won't have as much spending. So
What's an ideal number for fund balance, you think, or?
it's basically 30% of your total expenditures. So if you're at 800,000, your fund balance should be around 160. If you're at 500,000, it should be 150. So right now you're at 400. Your fund balance is 480. So you still have
30% of,
total expenditures for the program.
and
in
you
any
said
year.
at 800, it's 160? That's 20%.
Sorry, 240. You're right. Correct.
So is it 20% or 30%?
It's 30%. Yeah.
Okay.
My math is wrong.
Okay, I just wasn't, it was a nice round number and I wasn't sure which.
I was doing the math wrong. It is 30% for sure.
Okay, thank you.
So you're closer than I said you were. Okay, so after your basic financial statements, which ended with Exhibit 8, the food service exhibit, you have notes to financial statements. These are designed to be informational to support your accounting principles that the school district abides by, as well as describing significant balances that you have. I don't read through any of this for you, but if you had read through it and had any questions, I'd certainly answer them. But they are pretty standard and pretty informative, I would say. A lot of it is based on your pension liability, a lot of required disclosures on that, as well as the OPEB liability, which is some of it's tied to the retirement system, and another portion is tied to the school's own actuarial report. Annually, or every 2 years, you hire an actuary to do a full valuation of your other post-employment benefits. The only post-employment benefit that the school district provides, and this is only in accordance with government accounting standards, is the ability for an employee, when they leave, to continue on the school district's health insurance program through COBRA. That ability was determined by the Accounting Standards Board to be an implicit benefit that you're earning while you're employed. So being part of a pooled health insurance program, you would theoretically have a lower rate. So as I had to tell someone recently, this standard was designed for big cities who actually provided post-employment benefits other than pensions. They would provide health insurance, and they provide some other sort of tangible benefit. But GASB, and we're 10 years plus into this now, but GASB had to apply that consistently to everyone. So unfortunately, all my clients see this liability, and fortunately, it's just on your full accrual statement. It's not something you budget for. You're budgeting your monthly health insurance premiums. That's the only effect that you have.
And how long does that benefit last? Forever?
Basically, yeah. So the actuary, it's always a rolling 30-year calculation, and they're using their actuarial talents to determine the life expectancy and the rate changes, and so, like I said, the school district's paying a few $1,000s every 2 years, and then you usually have to get an update if there's significant changes in interest rates, which, like I said, there was last year. So there was probably an update done. Luckily I don't have to defend it, but I just have to say you have to comply with it, unfortunately. So
Is it just for COBRA, or is COBRA just one of the elements of it?
that's the example basically. It's for the health insurance itself, for the ability to that's the only way that I think.
But how long does that offer of extended coverage last?
I'm not sure,
I don't-
and it would be a factor in the calculation itself, but it's
So
Might
they
come by 6
recalculate it every
months.
year based on your payroll, or based on
based,
your?
based on census data, your census of your employees, the premiums of your health insurance, the market rates, and so on. There are some there's required exhibits for your pension liability. You're required to do a 10-year status, basically a 10-year listing of the various information, such as your proportion of the total liability,
So sorry.
and payroll information, as well as required schedules for the OPEB liability. OPEB, the school district has not complied with that for 10 years yet, but you're at 8. Now you have 8 years of data, so you're getting there. And then your final exhibits are the combining balance sheet and combining statement of revenues and expenditures for your non-major funds, as I said. Just briefly, student activities has a fund balance of around $42,000. Your athletic revolving fund has about $40,000. Your miscellaneous fund has $230,000. And then your grants has zero fund balance, which is how grants work. You're only recording revenue when you expend it, so you should always be at zero. Then the last 3 exhibits, 15, 16, and 17, are just detailed versions of the general fund budgetary statements. As we went through, you can see the expenditures by function and the positive and negative variances, and there's also a statement of revenues. And then Exhibit 17, this is the schedule of changes in unassigned fund balance. I think this is one of the more useful schedules. You can see the school district started the year with an unassigned fund balance of $804,000. Voted to appropriate $450,000 of that, and then the remaining math doesn't work, but there's typically some adjustments between setting tax rate and the final audit figure. But the fund balance used to reduce the school district assessment was $405,000. Revenue surplus $65,000. Unexpended balance of appropriations of $1.1 million, resulting in a budget surplus of almost $1.2 million. You had an increase in non-spendable fund balance of $41,000, which is a corresponding decrease in unassigned. Same with any changes to committed fund balance. So in this case, you had a decrease in committed fund balance of $25,000, which resulted in an increase in your unassigned fund balance of $25,000. That budget surplus figure, as I said, is roughly 4% of your total appropriation. The year before that same calculation was 3%. The year before that was 6.8%. So on average for the 7 years of data I had, you're at 4.87. So your rate smack where you typically are.
Is there a preferred number for that?
There is not.
0.
No, actually, I know it's not 0.
Should be.
Because if you're running at 0, that means you have a high risk of having to
right.
have a special
Running
So
meeting.
risk versus,
No, but I didn't know, sometimes the state gives target numbers for some of these balances, like the 30% that he was saying for the
Right. Yeah,
food
they.
services.
I believe the only target number that they have is your actual unassigned fund balance of your as a total. That's usually between 8 and 17%. So your fund balance happens to be similar to that number. It's not related to that, but it is derived from that. But it's just because they're similar, that doesn't. But so, anyways, I could do the quick math and say you're about 4% or so. The last page, just our letter to management, where we identify Any findings that we had, any issues we saw? As you can see, and as I discussed, the only note we had was on the food service fund resource management was the compliance term. Again, the food service fund balance, as a result of the previous few years, is higher than is allowed under the federal program. And so the district, this is not the first year, so I believe there's already been a spending plan in place, as we said. And again, the last 3 years you've seen a decrease, so you're working towards it. You still have excess. So other items that we may have talked to staff about, sometimes we'll just correct issues or recommend corrections if it's a minor issue while we're there. It's more efficient that way, essentially. I would like to see, I think it'd be a good idea to put your estimated revenues in your accounting system. I know the boards get a lot of reports that have estimated revenues, but they're actually not put into the system, or they haven't been, so I think that's a good idea. And then I believe I discussed with you as well, and I've discussed with the district, that Fund 23, which is that miscellaneous fund that we're referring to, there are some of those accounts that have money that's might be available that may just be there because no one knows that it's available. And so,
Just as a point of reference, we took that back to the board and
Okay.
we dug into it. And unfortunately, it's not that they're not aware of it, many of them are so specifically earmarked that we can't access them except for very special circumstances, which we haven't had the need arise.
And
Yeah,
that-
I was, when you said the amount, I kind of put a little asterisk for Fund 23 because it's something I would say we look at as we go through the budgeting process like every couple of years. But that's the exact issue, is that many of them are earmarked with very specific
And last year was my
requirements, and I don't know
first year
how,
hearing that, and
I don't know how we manage that. The money just sits there and,
there is a lot of, and there's a lot of accounting of it. I know, that's one of
Yeah.
those areas where they're keeping spreadsheets in the business
Yeah,
office and
yeah,
everything.
mhm.
So I don't know, the business office could work with me and with DRA and everything to figure out what's allowed or not, but there may be a chunk of that can be moved to the trust funds and just held there until the 1 year you need it, it's requested that way.
okay.
These were, I know some of them were donations and things
Yeah.
for very specific causes. Can those get moved out? into
That's
trust funds?
that's
Who
just
would-
it,
who would
talking to
answer that
DRA,
question?
legal,
Um,
and getting an opinion
DRA
on
would be,
that.
I think, the first one that the board, the business office would just contact them. A lot of it would require establishment at a district meeting to establish a trust for those purposes, and then you could, so it would be a couple,
Some of
multi-step
them-
process.
Some of them apparently are pretty esoteric too. What is the detriment of its current situation?
Just additional administrative work, essentially, to track them. Monthly they're updating. They just have all the accounts, and so some don't have any activity, but some do. So they're just updating that monthly and making a file for the activity, so that when it gets audited, it's all available. So it has to be done, but it's,
Would it be any less work if it was separate trust?
well, once it's in the trustees, they're no longer dealing with it.
They're not part of but are they part of the audit?
Yes, we get the MS9 from the trustees, and then any activity, of course, the business office would still have
So it's-
requests to use that money and
So
everything.
the greatest benefit is to the day-to-day operations
Yeah.
folks.
Yeah.
Thank you.
That's all I have to explain of this report. Further questions, I'm happy to answer.
So the overall grade is?
We passed.
Great.
So I'm not sure if everyone is aware of some of the issues that have kind of come to light this week in some other districts. So I think your attendance at tonight's meeting, aside from the fact that we've been doing this for years, as we mentioned, kind of confirms in a public setting and in our minutes that, as a budget committee, we're looking, you're coming to complete the district's audit. We've been as you mentioned, your firm has been conducting the audits across the SAU for a long time, over a decade. We annually have this review completed. As a budget committee, we review it as well. There have been issues in the news lately with another district specifically who's facing a tremendous shortfall that's been brought to their community, and based on the information in media alone, seems that maybe some of their audit practices may not have been as diligent as this district's is, so, I appreciate you taking the time to come and, walk us through this process. But I think for me, one of the things where I just kind of say, I don't know how every other district doesn't have this requirement, because we certainly have requirements when the audit's complete to submit it to the state, on an annual basis. So I don't know how districts get to the point where their audits are incomplete for a period from, say, 5 years ago.
Right. Yeah, I don't either.
Okay.
Especially if you have, that district that size, they would always be required for a federal audit anyways, so.
Right.
And that corresponds with the regular audit.
Mhm.
But as, I do sometimes have to remind, or have to explain to clients or just entities in general, we're not we're a part of your control system on the very back end, where we're not coming in to look at your records on any sort of timely basis to correct and catch errors. We will hopefully find significant, and again, we're here to give you an opinion on materially misstated financial statements. So there's a material level that maybe sometimes is higher than you might think. We certainly do plenty of understanding of how your systems work, what your controls are, what your processing controls are. And then we certainly test those. But we're not required to, if it's not a federal audit, to ensure that those processes catch everything.
Mhm.
Nor
I
will we.
would like to actually follow up on that point. So part of what happens during an audit isn't just asking for reports that come out of our system. You do spend time, maybe you can talk about this for a minute, interviewing staff and talking through exactly what their processes entail, and then through the reports and supplemental information that's being requested, it reinforces whether we're following the procedures that our staff is aware, and does the actual documentation align to the understanding of what the practices are. So a lot of time is
It's
spent.
like ISO practice, say what you're gonna do and then prove
Exactly.
that you're doing what you say you're
Yeah,
doing.
we, I
Exactly.
mean, literally, yeah, exactly. We inquire about the true, HSA for a payroll transaction. Okay, so the HR department is the board's gonna approve a hiring, or the superintendent, or what's that process, and then, and then skip forward to what's the weekly or bi-weekly payroll process. Who's required to do timesheet, who just has a salary contract, and therefore you just calculate that number the same amount every time, and how do you track if you're earning sick and vacation time, and so on. So then, who's entering in the system, who's reviewing it, what reports are they reviewing, stuff like that. So we're trying to understand that, and then we're following transactions through that system as well as a test.
So you'll make sure that a contract is signed and like on file with just in our business, as our business
Well, he won't-
files.
he
A
won't
person
make
will have
sure of
offered,
it.
a teacher a contract at a certain rate. We have a signed document that's signed by the board, it's signed by the individual, it's in our system, they're being paid appropriately on a per pay period basis. That amount has been approved by the board as manifests get approved. Like, it is a complete end-to-end review to make sure that even for that individual, are all of their personnel documents in order.
Is that true, or are you
That's
sampling?
true for a
You're-
small
you're-
sample.
Yes, the
sampling.
sampling,
We're not
for a
looking at
sample.
your 250 employees, but we're
Yeah.
looking at some, and I agree. As the
So
pay
you're
rate.
not gonna catch, you're hoping to catch systemic problems
Right.
and not
Yeah.
isolated errors.
Yeah, we're looking, does the district, if the district doesn't even keep a file of contracts together in one place, maybe that's more likely than someone might slip through the cracks, or as an example, not for your district, but just in general, like those types of, like you say, systemic things.
I mention that just so that people understand, it's a lot more than just,
They shouldn't broad brush the news onto and assume that everyone's at the same level of risk or uncertainty.
correct.
So are we highlighting the benefits of the findings in the annual district meetings
Yes,
documents? Like the executive summary as an exhibit?
that we have in recent years made public statements of the positive outcomes. Whether we're highlighting it as much as we can or should, that's an opinion, and particularly to your point, in this environment, it's probably worth preemptively making
Absolutely.
stronger statements.
And I imagine these are on the website.
They are,
Yeah,
but
but
nobody looks at them.
I would make sure
Fair
at the
enough.
annual district meetings, we give everyone a book for them to follow all the details. It would be nice to include it as an exhibit of
Yeah.
performance.
Question. I'm fairly new with this team, so, are these audits required for every school district, or is it,
It's
voluntary?
my understanding because you're required, there's some allowances for local versus hiring a firm, but I don't think any school district is small enough for that sort of difference. I think you are required to over your,
Okay.
I know their town side is population, I know that, but there's also the RSA that requires an audit within basically a year after your close of your year, so,
Is that only for public
Yeah.
schools?
yeah.
I think it's a condition of receiving funds from the government.
There's a separate audit for federal, if you reach 750,000, which is about to go up to $1 million of federal money, you're required a governmental audit, which is
But I mean, if
different
you
level.
were a purely private institution, accepting no funds other
Right.
than people showing up and
No,
give you
if
a
it's-
check, the only one who would probably be looking for an audit would be IRS if they saw that there was something
Right.
going on there.
Yeah, the state requires the audits as being subdivisions of the state, so.
And things like our food service program, our grants, and things like that, they can go through individual audits as well, or compliance monitoring from the state to make sure when we're reporting into grants management to be essentially reimbursed for activities and things that have been approved to be grant funded. Those individual programs can go through compliance monitoring. Every year, the DOE picks a subset of districts to review their practices in the same way, and in addition to a regular audit that a district would go through. And they typically pick those, they use a grading system to rank the risk of each district, and they'll pick districts from low, medium, and high risk categories. It isn't just if a district is considered high risk, it could be just because of the sheer amount of money that it would get, but it doesn't mean compliance monitoring is only for a district that gets a lot of money. It could be on a district that gets a small amount of money as well. So there are many, many levels that we're subject to review and
Yep.
audits and approvals.
I have a question. We now have a new leader in our business office, and I've been on the school board long enough to, I think this is the 5th business administrator that I've had association with, and each one has different methodologies of building their team and operating their team. The last several years under Kelly have seemed to produce really positive results. Not to say the others didn't, but that did. Is there anything that you can put your finger on that this district in recent past has done really well, that in terms of getting the results that you are aware of, that you think are worth highlighting? Are there any opportunities that you see of things that this district might do differently that would improve the situation? I'm just sort of gut reaction.
Well, I mean, the first thing that came to mind is they're always, the prep work that they put in for us to show up that first week of August, which is, 5 weeks after the year's over, is tremendous. And I think that obviously would speak to what you're doing throughout the year, because if you have to clean up everything in those 5 weeks, then clearly you wouldn't be prepared by the beginning of August. So
keeping up with it along the way.
keeping up along the way. And then I always, if there's opportunities to push down some of that audit work to, staff levels, but that's more of a, I'm not sure what the workload is in general on, your staff at the time being, so I wouldn't ever say you couldn't do it. I just would say, there's always, some of the stuff I need for audit is not complex, it's just time consuming, maybe. So if there's transition of that time for focusing upper level first, other things. But it may already be
So
sufficient as it is. I don't know.
The sort of things that are important but don't seem urgent at the time, and they just don't get done.
Yeah, I mean,
sometimes.
there's always, right, so we came in August, we got 80 to 90% of it done, tested balances we need to test and so on, but there's a few things that we're gonna be waiting on, and we always are. Schedules and capital assets, which is updated once a year, and it's not, really has no daily focus, I imagine, of management or even the boards. It's just figures that need to be in here, so
Is there any,
priority wise.
any resources or training that would be particularly valuable to a new business administrator in understanding the elements of doing what you described? Because I don't know what the state offers for that.
Yeah.
Or
Well, the Association of School Business Officials, joining that, networking there. Obviously, everyone's in the same boat around the state. That's always been appears to be a good resource to BAs. New Hampshire GFOA is a little more town centric, but still governmental accounting based. So it's a lot of information on the accounting aspect of what goes into government accounting. So that's another, and those are meet regularly. They have a big network of people that communicate regularly and can answer a lot of questions that way. So I imagine those are useful. And that's what I would
Great.
certainly recommend.
thank you very much.
Yeah.
Yeah, good questions, Tom, thanks.
Well, seeing no other questions, I will thank you again for your time this evening. We do sincerely appreciate it, and I'll offer my kudos to the business office for being ready for that audit the first week in August. It is a short window, and I think, as you said, it's a testament to the amount of work that takes place during the school year so that they're prepared for your visit. Because as a reminder, when your firm comes, you're doing all of the districts, not just the co-op. So everything's in triplicate. Actually, whatever you asked for, they have to provide it for
Yeah,
the three
Probably
different.
quadruplicate.
Or
The color coding system has not failed them in
Yeah,
all my
there you
time
go.
here. So
What color are we?
Purple, I believe, right?
As long as we're not red.
There's no red, I don't think.
Brookline.
Oh, I forget. Yes.
Great. Well, thank you very much.
It's my pleasure. Thank you.
See you. Yeah, good to see you.
Thank you.
Okay, I'm going to, let's see.
Oh, this is great. Brookline's red.
I'm going to move on. We'll get to the minutes at the tail end of the meeting. I want to talk a little bit about, give a little bit of a legislative update. Now, typically, by this meeting, some law firm or another has put together a complete overview of the legislation that passed. The law firm that's done it in the past didn't do it yet this year, or at least I didn't see it, but I was able to get my hands on the School Board Association legislative summary, which I will share with everyone, but I didn't get it until today. So I included a legislative update on the agenda because I just knew of a few things, but the summary certainly did help. I will pass it along to everyone and distribute it, but I did want to mention a few of the pieces of legislation. I'll mention two that operationally affect the schools the most, and Tom can speak to those a little bit when he gets to his school board update. And I just want to mention some of the financial aspects. So the two big, I think, operational ones that got a lot of attention were the New Hampshire Parental Bill of Rights and the bell-to-bell cell phone ban. The New Hampshire Parental Bill of Rights is a comprehensive summary of what many districts, I think, already have in place in policy about what parents, can and cannot request and things like that. And operationally, I'll look to Tom and the board to see if there are any updates to our policies that need to be made to make sure we're aligned to the requirements in that bill. And the other one was the bell-to-bell cell phone ban, which by law requires our students to not use phones or personal communication devices like Apple Watches or smart glasses or any other things that are out there from the bell at the beginning of the day until the dismissal bell. So if you looked at the agenda to the most recent school board meeting. There were lots of policies that were being addressed, and that ban was, that requirement was a topic, and Dawn sent out the draft minutes earlier today. From that, when was your meeting, last week?
Last Wednesday.
Last Wednesday's meeting that had a really good comprehensive overview of the discussion that the board members had. So while I have a senior this year and haven't even seen him yet today to see how the first day went without being able to use his cell phone, that is in place district-wide, and students will not be using their phones.
SAU-wide.
SAU-wide, yes, and statewide. But that ban, I learned from your minutes that the middle school already had a policy of the students not using their cell phones during the day. They could
Yeah,
have them but not use them. And they had that in place for a couple of years, correct? So, but now it is I think there'll be some more attention put on that by our staff to ensure that students are free from distractions and focusing on the work at hand. They do still have Chromebooks, and we'll use those accordingly, but your cell phone will not be your, personal device. I think for those of us who've been doing this for a bit, there was a lot of attention on bring your own device policies before COVID, so it's more than 5 years ago, when not every student had a Chromebook and things like that. And so we've really kind of come full circle now to saying, okay, Chromebooks are great and available to the students, but cell phones will not be.
But the implementation of that is yet to occur.
Nope.
No, it's in effect.
Well, what did I read then about the school board involving the community in the implementation?
We're looking to get community input on the specific wording of the policy.
Okay.
And that's actually a requirement of the bill. The law itself was for all the districts, to do that. But on a,
It's more a question of knowing that this is the law. Where do your concerns lie, and how can we address the concerns, knowing that personal devices are not part of the tools available? So, for example, parents who have concerns about communication, parents who, and the biggest concerns are coming from parents, not from students. Parents who are
Yeah.
concerned about finding out about changes in athletic schedules that used to be texted to them. What alternatives is the public looking for, knowing that cell phones from a text from their kid is not going to be the method of communication?
So there's still quite a bit of discussion to go. Is that accurate?
As
I mean-
far as what happens in the school, no. The ramifications of what's happening in the school is,
So what, you can have the cell phone, but you can't use it bell to bell. Is that basically what's going on now?
the recommendation is that you not bring any device into the building.
Okay.
If you do bring it into the building, it cannot be brought out at any time during the day.
Okay.
So what
And-
stops a kid from going outside, using it for an emergency or using it for something they need to do and then bringing it back in?
To leave the school, they need permission.
kids can't just go.
You
They
can't
cannot go for a smoke break.
No.
No.
No, man.
No, because the doors are locked. They wouldn't
Okay.
be able to get back in.
I've having
So,
grandkids in high school and junior high school, and there are some dilemmas with that when you have
Yes,
students.
Just take
so-
the time out. This
Yes.
discussion should occur at the school board
yeah,
meeting.
so that
Yeah.
was the next
Yeah.
point I was gonna make, was that I brought it up because those were the two big operational ones. I wanted to put it out there just so that you kind of all know
Okay.
what's happening, but I would encourage you to look at the last, school board meeting, review the minutes. They're,
We really want this discussion
Right.
to occur in the place where it can be addressed, because
Which
we
will be
are.
the next school board meeting.
Well,
if
the
we're
next,
ready.
Yeah.
the next two, so we
Yeah.
had first reading of the policy, it is part of the packet. I would suggest everyone who's interested, read that at a minimum, and if they've got the patience and the stamina to, there was both a discussion and a policy discussion.
Mm-hmm.
So both of those, which were fairly extensive.
Yeah,
I'm
and-
getting into my school board report, but
Sorry, well, that's okay.
No, but that was a big thing.
But
the-
Dawn's minutes are very
But
comprehensive.
the key
so-
is that the policy is, at the moment, a work in progress, but the actual implementation has already taken place.
Mhm.
It
Excellent.
was required by law.
Yep.
Yep.
Thank you. I appreciate just kind of taking that a little bit out of order. I just kind of wanted to start with that before we get into some of the financials. So I'm going to talk about, I don't know, maybe a dozen of the big hitters. In numeric order, House Bill 138. This requires, if a district already requires tax impacts to be printed in the warrant, this would require anything that has a multi-year impact to include a multi-year tax impact.
Is that only if it's included by, what would be the word, by
It-
a vote as opposed to
Yes, if it,
discretionary?
so, exactly. So what we've seen for probably the past 5 years has been a petition article to put the tax impact on the warrant.
Yeah,
And
it
so-
it is in place in Brookline.
Yes, so in Brookline, any future, item like a CBA, that's gonna be San Bernardized in a warrant by including, say, 3 years' worth of
Only if it's
financial.
amortized?
Depends what the warrant
If the
article-
warrant requires has a multi-year impact, so yes, for a San Bernardized CBA, because we're stipulating 3 years for approval, in a district that requires the tax impact to be part of the warrant, not here in the co-op, they would have to put in 3 years of estimated tax impacts.
So
But if
bonds,
it's a
you,
3-year contract, non-San Bernardized, do you have to put the 3 years in?
No,
You don't?
no, because you wouldn't be including the financial impact in the warrant itself.
Okay.
so
that
a
was
bond
the-
you would have to put for so many years?
Yes, a bond would have to be for 5, I believe it's 5 or 6
Okay.
years.
And those costs, are they increasing year to year, or they will be flat from year to year?
It depends on the structure
The
of the debt.
the
Sorry.
estimates that get put into, like, for a bond, we would know what bond payments are. And to estimate a tax impact, I mean, you can do it a couple of different ways. You can make assumptions about tax bases. You can use just the current, the year that you're in and say, we're gonna hold that tax valuation for the community, the tax base, amount flat, and we're gonna estimate what the tax impact is going to be. So there,
Well, you can, yeah.
so it is an estimated impact.
Estimate.
And you would put as much value to that as a person attending the meeting to say, if now I'm gonna tell you what the estimated impact is, for 5 years from now. So
And there's
With a
nothing-
little note that said estimated,
it would, yes,
it may
it's,
change.
it's,
No,
it's
it's a
all
big- it's a
estimated.
big-
Any
big
tax
part.
impact is estimated at the time of
Yeah.
balloting or a warrant, because nothing has been finalized. Our estimates don't get finalized until November. Our tax bases don't get finalized until November. Adequacy gets finalized in September. So everything is an estimate. This is just requiring the estimate to be expanded over a period of time if it's a requirement in your district.
Does tax rate play into that estimate?
What?
As a starting point, maybe,
Does
but
tax
that's,
rate
how can you go
into the
beyond that?
No, does the tax rate play into the tax impact calculation?
I don't know if I'm following you, but the tax rate is a result of the the net amount.
No, because the tax rate is, there are many things that affect the tax rate, and a lot of it has to do with things like, the assessments and stuff.
Yep. Mhm.
So, does the I don't know how you calculate the estimated impact. Is the tax rate a factor in that calculation?
The tax rate is gonna be an output of that
Okay.
calculation.
Because
We
what
can
I-
spend time on that
No,
this
the reason I
fall.
was asking, is there anything that prevents someone from saying, well, we think the tax rate's gonna go down, and therefore, versus someone saying, we think the tax
No,
rate's gonna go up?
so what you're,
To address
if,
that one.
okay, you can go ahead, Brian.
You understand
Because
my,
Yeah, I understand what you're saying.
How
And
well
this,
easily it's
this is,
manipulated.
I'm gonna state this right now. I have supported these, the petition warrant articles to put the tax rate on there. I am now going to be writing the petition warrant article to repeal it for Brookline, and here's why. So what these tax estimates do is they basically say, what is the cost of this, divide it by your tax base, and that's your tax estimate. For most warrant articles, that's perfectly fine. That's exactly what you want to tell people. It's what we always tell people anyway. However, when it comes, at least to the town, the big one, of course, is the budget. If you just take your budget and you divide it by your, you're going to project a tax impact that is enormous, because the town has millions of dollars of other revenues that come in that offset that, but you can't take that into consideration when you're doing the tax estimate for the warrant article. A lot of our income comes from vehicle registrations and things like that, millions of dollars. But we have to, but when we're creating the tax rate to put on the warrant article, we have to assume that all of those revenues are zero.
Really?
Yes,
You're
we
required,
do.
or you choose to?
It's an
We
expense.
we are required. This was, the DRA specified, this is how you do this, and you have to do it that way. So last year, when we had the warrant article, we said, oh, our tax rate is gonna go up, more than double, even though that was not true in the slightest. And next year, we'll be doing the exact same thing. And so that's why I'm gonna argue for us to repeal that, because it makes no sense for the budget warrant article. For the other articles, it makes sense, but for the budget, you're just telling people you're gonna double, triple your tax rate.
Can I ask
And it's no real relation to
I'll
reality
talk to
at
you
all.
offline about it.
But,
'Cause
okay.
I'm just-
Oh, little sidebar.
Okay, number
Okay,
two?
that's number one.
Yeah.
Number two,
I gotta go to England, okay?
okay, we're gonna make up some time. House Bill 200. This one requires, in districts that have a tax cap, a 3/5 majority to override a tax cap. To institute a tax cap takes a 3/5 majority. To override a tax cap, that will now take a 3/5 majority. It used to be a simple majority. It would now be a 3/5 majority. And one other piece of this that does affect our district is that the SAU budget warrant has to move to the beginning of the warrant.
It has to be the first or just early?
Move to the beginning of the warrant.
So.
That
so
is
the-
what the wording of the
So
bill.
that means it would go before the bond stuff? Cause I thought
I-
the bond said the same thing.
You know, these are questions for legal counsel. I'm reading
Okay.
what is in the bill.
Okay.
Move to the beginning,
you-
because the concern was for it to pass, it then contributes to what we usually,
Yeah.
we do a lot of things and build to the budget in some cases. The co-op, kind of puts its budget in the middle, Hollis puts its budget at the end, but this is to ensure, the SAU gets funded, and, it would be, it would be within the tax cap, and anything that comes over it, if something were to go higher than the tax cap that's in place, that gets addressed a different way.
You
So
said
the town moderator,
that's part of 200?
That's part of 200.
so the town
House Bill
moderator
200.
at the beginning of the meeting, when he's going through the rules, he could say, okay, for today's meeting, I'm gonna define the beginning to be the first three.
We leave it to legal counsel, but when we do have to put forward CBAs and bonds and the SAU article, I think legal counsel would help us determine.
They do help set the order, but I was just curious if they use the same wording for this as they do for the
Yeah,
requirement
I don't
for
know
bonds.
if like the CBA is listed as first or something like that. This just says at the beginning. House Bill 228. I will say that when this is distributed, if you click on the summary that I'll send, if you click on the hyperlinks for each bill, we'll give you the bill text and the representatives and senators who put these forward.
Well, their website.
So on House Bill 228, this one addresses speaking time for petition articles. So now, the initial name on a petition article is considered the sponsor, that sponsor can assign the sponsorship responsibility to somebody else, but essentially, speakers to petition articles get 10 minutes.
They put a specific time in it?
10 minutes,
Wow.
minimum, in the law.
So if they're only for 2 minutes, we can take a break then.
Okay, so,
No, but what that means is if you have 7 petition warrant articles, you
They can
now
take
have a
over an
minimum of
An hour and a
70
half,
70 minutes.
now, I have not
of
spoken with
presentation.
our moderator.
Yeah.
I'm gonna assume that, the way the meeting is and this is an assumption on my part, not having spoken to our moderator, but I don't know that this speaking time precludes, action by the legislative body that
change the
wants to
table.
table an article or things like that. So I'm gonna leave that response,
Yeah.
I will leave certain things to legal counsel, I'll leave other things to the moderator. I'm just telling you what is in the bill.
So they wouldn't stop going to the meeting.
What?
Okay, House Bill
Purpose.
374,
What's the purpose?
speaks to the calculation of tax cap and budget caps. So
What's the number?
374. If you recall last year, one of the big changes that went into RSA 32, which is the RSA that we operate under as a budget committee and talks to how we budget and things like that, was the implementation of, in the tax cap language, the inclusion of language that allows for a budget cap as well. But in addition to that, it determined how a tax cap is defined. So you would take an inflation factor times change in daily membership, and that's how you would determine what a tax cap is. But the language is a little bit unclear, and so it was left up to interpretation, and I think the first time it was passed, it really wasn't necessarily accurate in how you would actually do the calculation. So HB 374 clarifies that. So there's some clarification to how you would implement tax and budget caps. House Bill 394 is, I know, Tom Solon, your favorite, which removes the voting requirement for our school board member. It still defines how our budget committee needs to be formed, which is 1 member per member of the school board plus 1. So we do have that. Unfortunately, our school board member can't vote anymore. I have spoken with the chair of the school board, explaining to her how much we value the input of the school board member, whether it's with a vote or not. And similarly, they value the input and our attendance at their meetings, which really hasn't taken place over time. So I think as a committee, we can talk a little bit about maybe if there are important topics, or several times a year, myself or any of us can attend the meetings to give perspective as well, and just to be a little more present with the school board itself. So Holly and I spent some time talking.
Just to piggyback on that, during the periods when the school board is discussing and considering the budget itself, that would be really helpful to have representation of the budget committee besides the school board member present, in the same way that you seem to find value in the school board being here for your discussions.
Mhm. That's easy enough to take care of, so. And hopefully there'll be a new piece of legislation that rescinds this one and puts the voting privilege back in place. That one was put forward, I think, by a single representative, and it had come up before. I think it was someone in the North Country, and that person puts up a lot of language about co-op, and that's specifically for co-ops. So for the school board member at the Hollis Budget Committee is still a voting member. This is specifically for co-ops. So the person who put this together, they, like I said, it's been probably 2 or 3 years, and a lot of that individual's bills that get put up, they're very pointed to the management of co-op budget committees and school boards, and I'm not sure what district it is. It is the North Country, and this one went through. So we'll see what happens this time around. House Bill 557, this adds that, something that needs to be added to the warrant or ballot, for the budget is the average cost per pupil for the preceding year and scores, for proficiency in language arts, math, and science, added to the warrant.
For the budget.
Yep,
So you add, what was it, the?
cost per pupil for the preceding year,
Cost, is that the?
so the last published year.
Is that the cost per pupil from the state as opposed to the weird ones
The
that people
cost
calculate?
per pupil for the again, that's undefined. I would say, as business officials, we would probably come together at that NASBO group on a monthly basis. What between this and another requirement, which I'll mention momentarily, the NASBO is trying to make sure business administrators are aligned to how this information is provided, and I would. I think with a lot of confidence, I would say the average cost per pupil would be the last one that was published by the state on the state website. That keeps everybody consistent with the calculation, and it's not ambiguous, and the information's available for any member of the state or, anyone on the internet to go and see where the information is from. Similarly, the state does have as part of its website, it does publish our language arts, math, and science scores, so I would say probably that's where those are gonna come from as well. This is on top of last year's requirement that requires, with the posting of our budget, some information that includes 10 years of costs per pupil on an inflation-adjusted basis, a listing of the top 5 administrative salaries and average salaries on an inflation-adjusted basis for, I believe it's our teaching staff. So that information in certain graphs, in certain font, on certain size pieces of paper will need to be published with our budget materials itself. But
So does
that was last year's law.
Does that mean it becomes part of the annual report?
Yeah.
So was that in your presentation last year?
It was not, because the bill was passed and then the implementation of it was delayed until this upcoming budget cycle.
And these ones that you're talking about?
Are in place right now,
So they will impact the upcoming one?
yes.
And these are just for co-ops?
This
Or are they
is for
all
everybody.
public
No.
schools?
This one's
The
for
only-
all
the-
public schools.
the only
And
one that was
homeschooling or other entities?
I'm
Is it-
not sure about charter schools or things
Yeah,
like that.
okay.
I just know how it affects us.
Okay.
So
Only
we'd
that-
publish
only
ours
that non-voting
in
thing
there,
was
would that be
co-ops,
like
just
state
the
averages
non-voting
and
number, that
other
was-
pieces of information to give people in the town comparisons to how we're doing compared to the state?
We're not comparing the information that we are required to publish doesn't compare us to anything. It just stipulates what it is for our district.
But wouldn't it be good to do that?
Not at that meeting, which is already
It
4
almost
or 5
sounds,
hours.
it almost sounds like the business administrator will have to hire an assistant to just focus on creating all the data.
No,
needed to
it doesn't
do
have to, because it's all gonna have to come out of this committee.
The
This
state
is all
already,
part of the budget.
the state already has all of that information on their website.
Yes,
They
and you
publish
can-
it all.
You
I
can-
agree.
Yeah, and if you wanna compare us, I mean, that cost per pupil
all
report is
there.
there. I think we should I'll add that to an agenda item and we'll go walk through the website and we'll see everything that's available, so.
Because whenever I've looked, we do pretty well as a comparison.
But we don't do well in raw numbers.
Right, but
Okay,
It's almost
moving on.
irrelevant.
driving that
Because
chair right out of.
Moving
Yeah.
on, because
Yeah.
it's 7:52.
It's always
Okay.
good to compare to
I'm sorry,
that.
what was that number again?
That one for the
557.
cost per pupil and the proficiency scores was House Bill 557. Moving
Okay,
on to House
moving
Bill
on.
771. This is the
771.
open enrollment bill,
771?
771. The way this stands right now is that there is no broad open enrollment requirement across the state. You may engage in open enrollment agreements with other districts. It is not a requirement to do so. So if you want to, you may, and establish whatever your tuition would be and whatnot. but you can only engage in open enrollment activities with the district you have an agreement with. So no one can call the business office or the superintendent and say, I live in Nashua and just want to come to your school. Our response would be, well, here's, as a parent, are you experiencing an educational hardship, and you would work that through the superintendent channel. If you'd like to pay tuition and we have space in our classes, here's on an individual basis what it is, and that parent would be responsible for that tuition. But there is no open enrollment agreement, so someone can't just say, I live in Nashua, I want to go to your school. That cannot happen unless we make an agreement with Nashua that says, here's what that would be. So open enrollment got a lot of attention. So I just want to be clear, there is no open enrollment in the state. However, we are required to add lines to our budget that, on the expense and the revenue side, that address open enrollment. So it's a line, it would be populated with 0, because as of right now, we're not anticipating entering into any agreements.
That's
But
totally
you have to just,
independent of tuitioning.
right. So that's House Bill 771. Senate Bill 292 addressed special education aid. I think they actually went back to calling it catastrophic aid, which we moved away from. One of the things that happened this year was that special education or catastrophic aid was funded at a level much lower than anticipated by all districts. This bill requires that a special education catastrophic aid to be funded at 80% of the entitlement. Now, there's still some interpretation of what that 80% means, but it does provide a threshold at some point so that it really wouldn't be as low as it was.
Is that,
in this
so
year.
that's assumed to provide an increase?
Yes, depending on how you interpret that. Yes, that's true. And my last, is this gonna be my last one for tonight? I think it is, looking at my notes. Okay, Senate Bill 295, which was for EFAs, the Educational Freedom Accounts. There is a new requirement that allows 10,000 students to sign up for an educational, or families to sign up for an educational freedom account. There is no longer the threshold has been extended to such a degree that it's like, it essentially is not a
But it's
poverty level
capped at
threshold.
10K?
It's 10,000 families. It can include siblings, and so
Okay. So it's a first come, first served?
it is a first come, first served. There are priority cases. So if someone is truly at a poverty level, they would be put in the queue higher than someone who's not. So it isn't just a first come, first served, and you get the amount of money. $39 million was attached to the cost of this bill. It's currently at $50 million and is over budget, and it just went into effect on July 1st, and there's a wait list, and they haven't gotten through all of the applications yet. So that's just a little aside. I'm assuming any additional funding comes from the Educational Trust Fund, and they have just some issues to work out with the payment. The payment to the individual families aligns itself to the elements of adequacy aid, so there is some money associated with base aid and other elements, but it comes out to be around $5,000 a student. So that's how you got the 10,000 times 5,000 is the $50 million.
Does it require specific budgetary consideration? Does any of the funding come directly out of a district's payments?
That is an excellent question. I don't know. I'm assuming that since the state established the level, that the state is taking over the payment of it, as opposed to, because what used to happen is the EFAs would be charged back a percentage of it to the districts. We were very minimally affected as a co-op. But I will follow up on that, because I don't know. I'm assuming it's a state level funding because they removed the income
So
threshold.
that'll probably show up in the statewide property tax.
Yes.
Adequacy, maybe the adequacy rate.
No, it's not adequacy. The adequacy that the district receives is completely different. The structure of how they pay per student through the EFA is aligned to the structure for adequacy, but it's two completely separate pools of money. And so as I say that, I'm gonna say that the state is gonna take over that, but I will verify that for you.
Thank you.
So those are my good news.
Just a few
Little
highlights.
topics and highlights this evening, but as I said, I'll get that, all out to everybody, hopefully tomorrow morning.
Can I just add something? That I think it's really important, and I'm very impressed that you go over this, because it's gonna impact our taxpayers at the end of the day, and we want them to know that, you know, we're here to make you aware of these things. So all the school boards should do this, and do you do that on the school board?
Do we do what?
Go over the bills that impact the education, the schools?
Individual board members look at different things. To a large extent, we rely on input from this group and from the administration, who follows it very closely.
Yeah, because I
Melanie,
mean, there are
okay.
things in there like, you know, new definitions of certain things that are related to special education. There
Yeah,
are
there's a
so
lot.
many
There
levels.
Yeah, I
are
know.
literally hundreds of them.
Hundreds,
Yeah.
hundreds.
And then most of it makes it through to us because in the past, our legal teams have alerted us, because they watch it very closely, and they say either you need to look at policy or you need to look at funding for these elements. I don't know the method, but the short answer is the school board is usually notified. I am not aware of anyone on the school board who has taken the action item to become an expert on it.
Yeah.
Yeah, and this, actually, the New Hampshire School Boards Association will come to a meeting if requested, and, to talk to the board.
Legislative update,
Yeah.
Yep, and give an update, and they can do a broad overview, or they can target, their comments to their input toward specific areas that you're interested in. So, I recently was able to attend one of those overviews, and it was really, 20 to 30 minutes, and they gave a very comprehensive view and addressed any questions of
They
board
have been
members,
doing
so.
previous years webinars on it, but I don't know if they are anymore.
I think they will be having one, but the one I was in attendance at was just in advance of that.
It's overwhelming.
It is, it's a lot, and I mean, there are, this is through, Barrett Christina and his team,
Barrett and Will were in Brookline on Tuesday night talking about school board responsibilities, and they said they've already done over 50 of those.
Mm-hmm,
So
yeah,
there's only 5 people in that office.
right,
I was gonna mention that
Thank you.
because of her exhaustive look into all these bills, we're gonna have a great description of the meeting minutes.
and
Because
honestly,
we have the best meeting minute writer in the business.
we do, Dawn's
And
fantastic.
so that would be a way to educate the public.
I
so.
thought I had it up, where is it?
For those who read the minutes. Yes.
Between the people that are supposed to be watching
Yeah.
tonight, plus the ones who read the meeting minutes.
Mm.
Oh, I thought I had it open, I don't.
I read
Oh,
them.
no, I do.
Oh,
Wait
yeah,
a minute,
you're
wait
in
a minute, wait a
public.
minute.
Who's
I
not?
had
Not
Who
that
doesn't
many
have to
people.
vote on 'em?
There's so many things.
And I think at the district meeting, we should have in the actual
Oh, here it is.
presentation, 1 or 2 charts that talk about new legislation and highlights, and
Yeah.
basically
I
correlate
nominate
that
Raoul
to
to
how
put those
things,
together.
how things may look a little different this year because of all this.
So the
you
le-
know?
Are you volunteering?
Just,
No, I can
just,
help.
just to
I'll
let
help.
everyone know, the legislative summary is 240 pages long.
Oh,
So
geez.
there's a lot in there. You can certainly search on the bills I mentioned, or, there's a
Yeah.
great summary at the beginning, and you could, pick keywords and things like that, but
And you
it's
sent that-
exhaustive.
You sent that to all of us?
No.
I
The
will
link-
send it.
okay.
I was
Thank you.
just able to kind of get my hands on it
Thank you.
today, so. There's that, let's see. Is there anything else, Tom, you'd like to add from a school board update perspective?
No, most of our time was spent on some policy items, going through the cell phone ban, and just getting some general updates. We did not have a, what month is this? We did not have a July meeting.
Can you just run through the names of the high school administrators, because there were some changes? We have a new principal.
Jacob Hess.
The short answer is
Thank
no.
you. Jacob Hess, wonderful. And Yolanda Flamino is still
that's
like an
unchanged.
assistant. And Cole Etten is a new assistant principal. And is there a third?
Cole Eden?
Yeah.
Really?
Mm-hmm.
I don't know.
Is there a third?
Is he a student?
Tracy's back, so she was.
He was
there
in
last
one of my kids'
Tracy.
class.
year.
He's
I might be
been
spacing on
working
her
on
last
Oh,
name.
oh, oh, we had her name
Uh,
in the presentation.
Excellent.
Lane. Yes, Lane is
Yeah,
correct.
he's a good kid.
Okay, so just kind of to let everybody know, and just Tom, really quickly, we're fully staffed and are from a teaching staff perspective, all positions are filled.
Yeah, I think the only issue is we still have a couple of para positions open. I think
Can I get a couple words on the assistant superintendent? Who is it?
Oh,
Should I know her or him?
yes,
what's your question?
The assistant superintendent, I've asked a couple of times.
What's
and it
Dot's,
was-
Dot's last name?
Dorothy Flaherty.
she's from Beverly, Mass.
So she's new.
She's new to the district, but she was an existing assistant superintendent in Beverly, Mass.
Okay. Yeah,
And she's assuming the roles of curriculum development, which
Okay.
was previously Gina's
yeah. All
area of
right,
focus.
thanks.
Um,
Good enough.
And then we still have, and Lauren DeGennaro is now Assistant Superintendent of Student Services, where she had previously been Director of Student Services.
Yeah, okay.
Okay, thank you, I appreciate that. Just taking a few minutes, I'd like to just get us ready for the FY '27 budget planning process. Go ahead.
Do we have the final budget and actuals?
Not yet.
Not yet.
We'll
okay.
have those in September. I did
Okay.
speak with Lance about that, and so we'll have
Alright.
those in September. Sometimes there are changes as a result of the audit and some shifts and things that need to take place, so from an FY '27 budget planning process, since we have some newer returning members, just kind of wanted to walk us through a little bit of kind of how the fall will unfold. In September, since we meet the fourth week of the month, we might be able to get a preliminary first view of the budget. Those discussions are probably taking place at the district level right now with administrative teams as things are kind of getting underway. And like I said, since we are a fourth week of the month, have a fourth week of the month meeting schedule, we've usually been able to get a very preliminary view in September, because in October, we put together our preliminary guidance view, which is kind of directionally with input and evaluation of kind of puts and takes and any information that we have at the time, any known information about collective bargaining agreements that might be coming up or things that we know are being implemented, directionally where we view the budget going for the upcoming year for FY '27. As we move into November, we'll get some, we continue to get refined views of the budget, but we will also get information related to adequacy estimates for the upcoming year. The state is in the process of publishing where adequacy is finishing or in place for '26, but they will also publish estimates for '27 for every district to use in their planning process. During this kind of September to November window, the SAU Budget Subcommittee will have probably some Zoom meetings to talk about the SAU budget and work on the SAU plan for any changes to the budget or headcount or anything that is going to affect SAU administration on Lund Lane. As we recall in the district, that budget is allocated to each of the districts, so we do look at that in total. It's the fourth budget for the business office, and has its own planning group that is comprised of a finance or budget committee member from each district, as well as a school board member and the administrative team. So that would be Lance, Gina, and Lauren, and probably Dot as well. So we'll do that in those kind of September to November timeframe, and as those updates and draft and preliminary budgets are developed, I'll be bringing them here to this meeting and sharing everything with you. And that budget goes to public hearing and governing board approval in December. It's publicly noticed, shared, and discussed, and that process itself for the SAU budget is completed essentially by the end of the year for inclusion in the warrant and the public hearing documents that we have in February. I don't know are there any collective bargaining negotiations this year?
Not for the
Not for the co-op.
Excellent. So we know where the professional staff agreement was Samburnized. One of the items that Tom Enright brought up in the spring was as a budget committee for us to really kind of dig into the contract in a non-contract year. And so I think in September, maybe we can start doing that. I'll make sure everybody gets a copy of the most recent collective bargaining agreement, and we can decide as a budget committee what areas we'd like to just, dive into and evaluate and consider, or maybe identify some metrics.
I would greatly appreciate that, and I could address my issue briefly at that time too.
And we'll include that in the
Issue or issues.
We'll include that in the September agenda then. So once we get to November and we have more information on enrollment, adequacy, and we continued cleaning and refining the budget through guidance and meeting guidance or coming in under guidance, which we've done for, I don't know, the last 3 or 4 years. We just keep refining that process since there are no collective bargaining agreements. We're looking at the output of that process by the end of January, but we won't have that on our plate. So just kind of depending on how all those views of the budget go, that's how we're going to spend December and January, just refining it, making sure we're aligned. We'll have a public hearing at the beginning of February, and our March meeting will be at the beginning of March. So that gets us through the planning cycle.
And I'm gonna be running for office.
You are? It's your seat? Okay.
Yeah.
Well, so we'll figure out who's running and whatnot.
It must be
that
somebody
time.
else too, no, just you?
It might.
I'm my
There-
3-year
no,
term
there-
is up this.
I'm not running.
There must be. It's
Brian.
probably Dave.
Yeah,
then.
Dave.
If Brian isn't saying he's up, then it's
I
probably
don't
Dave.
know.
We'll figure that out.
I'll figure it out.
So, so just at a fundamental level for FY27, we've established there are no collective bargaining agreements. NHRS rates will be fixed because they were changed for this year, and they're in place for 2 years, so we know what the NHRS rates are. And we would be talking through as we're evaluating the budget and any capital needs that the facilities committee identifies, and if there's anything like on a large capital scale, like we have the bonds and the projects that have been in place for the middle school and the high school, but if there's any other large scale item, that'll come up and through the budget process itself. So that kind of keeps us busy enough for September through February. I'm happy to add any other, some of the things we mentioned tonight, aside from the collective bargaining agreement, was talking about some of the reports and information that is available on the state website. And I think we could spend time talking about adequacy aid. There are changes that get made to that grant on an annual basis. And the DOE has a lot of very good information available, and it's something probably we haven't done in a long time as a budget committee. So if anyone wanted to delve into that, I'd be happy to work through a discussion on adequacy and, really any other kind of component to our process, maybe the tax calculations, because we do, with the Hollis Budget Committee, we have a tax model that tracks rates and impacts since probably the last 20 years. And we do it for Brookline as a town and at each school district, and similarly for Hollis. It's pretty comprehensive. It's just a great place to look for historical information and look at historical trends. So that information I can review. And we can spend some time too talking about those required reports that are going to be necessary to go with our budget, and talk about what exactly needs to be included, and inflation. I will say there's one slight change that I would have to the NASBO calculation of inflation, and I think I think I would recommend us and I can get into this in a little bit more detail, but the chair of the Hollis Budget Committee and I have a pretty comprehensive inflation model as well, and feel that it really captures what's necessary for those reports better than the one that's been proposed to the business administrators. So my proposal at the time would be to work with the model that we've been using in our districts for at least 10 to 15 years. So those are the highlights.
A couple of requests. I'd be interested in seeing how we choose to budget expenses for heating with the switch from oil to propane. And I've been told that the co-op, or at least the SAU, is now going to be the lead on the contract pricing model because of we're the biggest consumer. So I'm just curious to see if it drives any kind of change in the number that that will affect your guidance. That's number one. And the other is, I'm curious if we can look at anticipations for insurance, not just benefits insurance. I'm talking overall insurance, because I know from homeowners insurance and commercial insurance, the recent storms and things on a national basis have resulted in underfunded insurance companies. So I'm wondering how that's affecting us, along with people exiting the market.
Okay.
It is Raul and Dave Blinn that are up for re-election next year.
Great. Thank you. Okay. Any other questions, concerns? I think we have a lot to cover, a lot of ground to cover, and feels like a lot of time, but it tends to go pretty quickly. So I don't believe I have any more announcements. I would like to go back to the approval of the June minutes, since that was something I bypassed earlier in the agenda. So at this time, I'll take a motion to approve the minutes as presented from our June meeting. Motion by Tony, seconded by Raul. I don't know if there are any comments, recommendations.
Having not had a chance to read them yet, is there anything I should care about?
Weren't you a key
That's why
speaker at the?
That's why I'm asking.
We did the
Yeah.
facilities overview. Lance was here and did the facilities overview.
And
That was
I'd
the
like to
main-
abstain, because I was not here.
Okay.
Did you read them?
I did.
Well, you can still vote on it if you think
Oh,
that they're good.
really?
If you want to, sure.
Yeah.
Okay.
Okay.
I'm just wondering if was there anything over. Member Solon stated it likely he would stop attending meetings.
Oh, yeah, that was a highlight of the meeting. That's for
Yeah,
sure.
let's not go over that
The
one.
one that's taken out?
It's an accurate,
reflection of the
And here
meeting.
And
you
here
are.
you are, and here you are.
Thank you.
well, I didn't attend the, July meeting.
We didn't have a July
I didn't
meeting.
attend the July meeting.
We missed you.
I didn't even attend the school board's July meeting.
Wow, you must have had a crazy
Took a
summer
month
doing
off.
all these other things.
Yeah, Melendy Pond.
Okay, seeing no adjustments, all those in favor of the June minutes as presented? Sorry, Tom, I cannot count your
Oh,
vote.
that's right. I can't even vote on minutes.
6-0-0.
Oh, so it doesn't matter if I read
But,
it or not.
no, let's have it
No,
vote
it's
anyway,
still-
but not
Not
count
counted.
it. Can't we be defined
No,
that
it's easy.
way?
It's easier if I don't vote, because that way I don't
Plus
have to
one,
read 'em.
because Tom would have voted yes, would have voted to support them.
Are we going to meet in December? And if so, I'm gonna guess that we're not gonna meet on Christmas Day.
We're not meeting Christmas Day. I know, I'm sorry to disappoint.
And don't meet during Hanukkah either.
Okay, I'm not sure when Hanukkah starts. So
It's
you
the
can
whole
know.
month.
Now, I know it's only 8 days. So.
That's because of Adam Sandler. That you know
That's
that.
right. So well, we have the same issue in November as December, because the fourth Thursday is Thanksgiving as well. So if we could go to the third Thursday in November, that would work for people. Oh, wait, let me just run through all the meetings. So we'll skip, so September would be September 25th. October would be the 23rd. That's a 5 Thursday month, but the 23rd is the fourth Thursday. Then we could go to the third, and actually that kind of works, having the 5th week, because it would be 4 weeks later. If we do November 20th, and then December 18th.
Yeah, third Thursdays are hard for me.
Okay.
I could probably do one of those, but taking both of them
Okay.
would be difficult.
All right. We can't do the third Wednesday because those are the school board meetings.
Well, they aren't in November or December because we move it so that some other district can move theirs up a month. So ours will be on the 12th and the 10th.
Okay. I mean, we could
Okay.
push to, does Mondays work for people?
I mean, do you want to do it on the third Wednesday? Is that?
I don't know, that's what I'm kind of checking. So if it's a
It
third
works for me.
Wednesday, it's the 17th
Mhm.
in December? Okay, move it back to the 17th.
17th?
Mm-hmm. Yeah, okay. And then we'll be back on track in January. We'll be at,
In November, we're gonna move that one to the 19th.
do you wanna move that one to the 19th as well? Move to the Wednesday, the 19th? We can do that, if that works for everybody.
Yeah.
Okay. And then in January of 2026, oh, that's another 5 Thursday month, so we would do, Thursday the 22nd. And then I know figuring out the calendars for the public hearing will be upcoming kind of during the fall. So usually somewhere in that first week of February is a public hearing, and we don't meet at the end of February. We meet at the end of January, we do the public hearing for February, and then the March meeting, whenever that.
We got a date yet?
No. Okay, I think we have plenty of agenda building items moving forward. So at 8:21, Tom, I'll look to you as our process observer this evening.
It was
Brief
a great
summary and
meeting.
readout.
November,
My headache is only mild.
Third Wednesday.
That's it.
Great. And if there are no other questions, concerns, items for discussion, seeing none, I'll take a motion to adjourn at 8:22 PM from
So moved.
Melanie, seconded
Second.
by Brian. All those in favor?
Aye.
Aye. 6, and I know Tom would make it 7.
Here in spirit.
Thank you, everyone.
Thank you.
Thank you.